Ready to pay off your home faster without having to earn more money?
We got 4 tips to crush your mortgage debt.
Hey guys, my name is Sam. I've been in the finance industry for 15 years, and I'm here today with my friend Dan.
And I'm Dan, and I've been in the mortgage industry for 17 years and the last 12 with FAIRWINDS.
Today we're here to talk about 4 ways to pay off your mortgage faster. But Dan, is it really important to pay your mortgage off faster?
Well, it is important to pay your mortgage debt as fast as possible. However, it is not the top priority. I think we need to establish a baseline here of when you should decide to go aggressive on paying down that mortgage debt. There's a lot of other things that take priority over that. So, for example, you have to build up your emergency fund. If you don't have an emergency fund of at least $1,000, that should be priority number 1. And so until you get those things squared away, paying off your mortgage quicker becomes less of a priority. Also, another thing that you have to keep in mind too is what other debts you have. So for example, if you have auto loans or credit card debt, student loans, personal loans, things like that, those should take priority over paying off your mortgage debt.
So Dan, what's your first tip?
Yeah, so the first most practical and easy thing that a consumer can do is make an extra payment per year. More if possible, but at least making one extra payment per year really helps pay down that debt sooner. And it also saves you in interest payments as well. And so you're saving money and you're saving time, and therefore you're really helping yourself get out of mortgage debt much sooner. Let me kind of give you an example of what that might look like. So take a homeowner that has a 30-year mortgage, for example. Let's say they have a balance of $500,000 and their interest rate is roughly 6.5%. Well, if you make one extra payment per year, you'll cut your amortization down by almost 6 years, and you're going to save $140,000 in interest payments. Imagine what you can do in your life with an extra $140,000 just sitting in your bank account. That is the power of making just one extra mortgage payment per year.
Dan, I've heard that refinancing your mortgage might also help you pay off your home faster. Is that true?
Yeah, that could be very true as long as you do it properly. So the first thing to keep in mind is if you want to stay around the same term, saying like if you have a 30-year mortgage and you want to keep your term around 30 years, well then you want to make sure that you have at least 1% of interest saving. By saving 1% on the interest rate, it ensures that all the closing costs you pay are worth your while in interest savings. And so you want to make sure it's at least 1%. However, let me give you an even better approach. The better approach is to shorten your term. So if you're at a 30-year mortgage, great. Go down to a 20 or a 15-year. Run the payment schedule by your loan officer. Help you understand what your new payment might look like. Because even though your interest rate might go down with a shorter term, your payment might actually go up a little bit. All right. But if you can afford the extra payment hike, then it'll make leaps and bounds in your financial future, because what it'll do, it'll shorten the length of that term, and by shortening the length of the term, you save tens, if not hundreds of $1,000s of interest over the life of that loan. And so shortening your term has a 2 savings effect. 1, you're making less mortgage payments, and 2, you're paying a lower interest rate.
How does someone know when it's a good time to refinance if they don't know what the rates are?
Sure. A lot of refinancing is about the timing. You want, obviously, to go down in your interest rate. Not many people refinance for a higher interest rate. And so therefore, right now, for example, 30-year rates are somewhere around 6%, whereas over the last couple of years, some people have paid in the 7 and even 8% interest rate range for a 30-year fix. And so therefore, if you can save about a full percent, you're probably in a good position to go ahead and with that refinance.
What would you say to someone who has an extra lump sum of cash and they don't know what to do with it, or they plan on spending it?
Yeah, so if they're at the point in their life where paying down their mortgage aggressively is the right move to make, well then I would say that you can apply that cash windfall that they have in their life to the mortgage directly to principal, and that's the important part. As long as you directly pay it towards principal, it'll reduce the time it takes you to pay back that loan, as well as reduce the interest that you are paying back. So for example, if you have a person who's just got a big inheritance from somebody, or perhaps got an unexpected bonus at work, or maybe they even took on a side job, driving Uber Eats or something like that, because they just want to pay down their mortgage as aggressively as possible, they can make payments directly towards principal with their lender. And the cool thing here at FAIRWINDS is that if they have their mortgage here, we have a really cool button on our website. It's called Freedom Payments. And by applying Freedom Payments to your mortgage, that applies the payment directly towards principal and does exactly what we're talking about here.
And you mentioned something about cash windfalls. What is that?
Yeah, cash windfall is simply money that you've come across that either you weren't expecting, or maybe that you were expecting but didn't have earmarked for a specific use. And so applying that towards debt is a great thing to do.
I bet if you got a raise and you made more money, that would help pay off your debt too, right?
Well, it could, but what happens to people is that as they make more money, they also like to spend more money. And so as they inflate their lifestyle because their income is inflated, they really don't put themselves in a better position. And as long as you continue to spend more money, and if your income goes up, your lifestyle goes up with it, your mortgage is still going to be a heavy burden on your life. And so by having a lifestyle that is more even as your income goes up, you're able to free up more cash to put towards that debt. And so yes, a raise in income, a job promotion, a transfer, a better opportunity, all those things could go a long way in paying off your mortgage aggressively, as long as you don't follow suit with your spending.
So I'm hearing don't spend more, but pay off your debt more.
Yeah, exactly.
Okay.
Make more, spend less, and have a good solid budget.
Okay, Dan, so today we learned to make one extra payment a year, refinance when you can to lower that interest rate, take extra money and apply it to that principal balance often as you can.
That is right. And I think the big idea, the big takeaway here is that paying off your mortgage takes intentionality, it takes sacrifice and some timing, but it can be accomplished if you follow these basic principles of paying it down quicker. And when your home is paid off, it creates freedom in your life so that you can be more financially free, and you can hopefully also live more generously.
So what do you guys think? Do you have any other tips we missed? Drop them in the comments.
And please make sure you like, comment, and subscribe.